Julia, plenty going on in India at the moment. Just this week we had the appointment of Mr. Rajan as the head of the Bank of India starting in September, and a lot of talk about the rupee, which has fallen almost 40% over the last 2 years. Not necessarily a bad thing. Lex cares about the average equity investor. How should they be looking at what's going on in India?
Well, ever since really May, when the US talked about putting back on easing, then there's been some impact on emerging market equities, but actually the impact hasn't been felt that strongly in India. So although there have been a lot of outflows, almost $11 billion, most of that has been from bonds and not from equities so far.
So that's ostensibly a bit of a worry that we haven't seen a big pull-out from India like we have from other emerging markets. And what are some of the other worries for Indian companies then?
Well, a lot of Indian companies, around about a third at least on the equity markets, depend on overseas markets for debt, partly because interest rates are much more competitive than they are in India. So obviously, as any interest rates overseas and any depreciating rupee and therefore appreciating dollar will send up their interest payments, and that will have an impact on earnings. So that's a negative. The other thing is that growth in India has slowed quite significantly, and that ties or correlates quite closely to what's happened in equity markets. So any signs of slowing growth will also have an impact overall on the equity market.
So apart from growth and apart from the effect of the currency on the balance sheets of the Indian companies, what sectors here will benefit and which will be affected negatively from a falling rupee?
Yeah, well, obviously export companies should benefit. Obviously, they're clocking their revenues in dollars and then booking them back home in rupees. So they've already run up quite a lot. So that includes the outsourcers, for example. Then you've got industrial companies that need to import a lot of energy. That'll be a big negative for those companies with a weakening rupee. Then you've got those that depend on investment in India to do well, and given that the investment cycle slowed, then that's going to be bad for those guys. So there's sort of some winners and a lot of losers as well.
Well, it certainly sounds like equity investing in India have a lot to worry about potentially, and a lot for the new head of the Bank of India to worry about. Thank you very much, Julia, for that update.